Nate here. I wanted to make a quick video and talk about what to expect when you're buying your first home. A lot of my customers are first-time home buyers and they have a lot of questions. Sometimes they're not sure like what's the best way to start when looking to buy a home. So my goal is by the time you're done watching this video, you'll have the knowledge you need to proceed with confidence. If not, don't worry. I'm here to help you every step of the way. Step 1, prepare your finances. Before we can even begin, we gotta look at our credit score. There's a lot of options out there to get a free credit report, so do that. Find out what your credit score is, because that's going to be the most important part of all of this. Ideally, a 620 is kind of where you want to be. I do know some lenders who will work with a lower credit score, but the interest rates are going to be higher. So if you can get to that 620, you're in good shape. The higher the better. Employment and work history. Lenders are going to want 2 years of W-2s. So if you don't have a very consistent work history, it's going to be a little bit harder for you. If you've been at the same job for 2 years with no breaks, anything like that, it's going to be a lot easier for you. So make sure you know where your W-2s are. For some reason, so many people do not keep track of their W-2s. And finding 2 years worth is difficult for them. Find them. You're going to need them. There's no way around it. You're going to want to make sure your debt-to-income ratio is low enough to get a loan. For some reason, this is one of the hardest parts for first-time home buyers to understand. They're always like, why is my loan amount so low? And it's the debt-to-income ratio. And I understand. It's kind of funny because these people will be paying, $1,000 a month for rent for the last 5 years, but then they go to buy a house and the bank's like, yeah, you can only afford $650 a month. So it's a hard part for first-time home buyers, but there's just no way around it. That's just the way it works. Debt-to-income ratio determines how much money you can borrow. Save for your down payment and closing costs. Closing costs? What? Yes, closing costs. For some reason, so many people do not understand that you will have closing costs. You're going to need roughly 3.5% to 20% down. There are some programs out there where you can get away with no money down. But for the most part, for most people, it's going to be 3.5% to 20%, or somewhere in the middle, that you're going to need for a down payment. That is in addition to your closing costs. Now, sometimes you can get the seller to pay your closing costs, but depending on the type of loan you're doing, sometimes your lender will not allow it, or they only allow a small percentage, which sometimes I think is 3%, which sometimes isn't enough to cover your closing costs. So just keep in mind, you will have closing costs, and most likely you will need a down payment. All right, we're still on step 1, but once you got your credit score, you got your W-2s for the last 2 years, you got your down payment, you got your closing costs. Now we can start talking about a lender. There's really 2 types. You have your bank that you already use for your checking account. You can talk to them, or you can go through what's called a mortgage broker. Now, the benefit of going through your local bank is they already know you. You're already there. You already have your account set up through them. So sometimes that makes things a little easier. Also, sometimes they might have some different programs that the big mortgage brokers don't have access to, especially if you're trying to buy things besides a house, like, for instance, land. things like that. The benefit of a mortgage broker is they have a much wider array of lenders. So a lot of times they can get you a better rate. And the final part of step 1, get your pre-approval letter. It's very important to get this up front. Once you have all this done, congratulations, we're done with step 1. We can move on to step 2. Step 2 is determine what you need in a house. In my opinion, this is the hardest part of the whole process right here, because your needs versus wants are going to change throughout this process. So for instance, in a market like today where inventory is very low, you're going to want that needs and wants list to be pretty small, because you're probably not going to find a house that has everything on your list. And as the process proceeds, you're going to kind of learn what's more important than others. Like, for instance, it's not uncommon for people to be like, a house in the country on acres, that or nothing. And then they realize that houses in the country on acreage, well, either are out of their price range, or 2, the ones that are in their price range aren't what they were expecting, and quickly they realize their money will go further in the city, and then they'll focus on the city. Or for instance, they might start out saying, I need a 2-car attached garage, and they might quickly realize, okay, that's just not happening. I will settle for that detached garage. So things like that. Needs versus wants, it's going to change, but it's important to make those lists ahead of time so you know where to start. Step 3, find a realtor. Not all realtors are created equal. Some realtors focus more on sellers, and they kind of push the buyers off to other agents, especially if they're like a team. Sometimes agents are just super busy, and first-time home buyers, they need a little bit more attention, and sometimes they feel like they're being ignored. I suggest talk to multiple agents before you agree to work with any. My advice. It's very common for people to look for houses online. They find a house they like, then they just contact the listing agent for that house. This is a bad idea. And the reason this is a bad idea is that agent represents the seller of that home. So their obligation is to that seller, to get that seller the most money for that home. So when you contact them, they're not representing you, they represent the seller. So they're not looking out for your best interests. In my honest opinion, the best thing you can do is hire a realtor and use that same realtor through the whole process. There's a thing called buyer agency. I recommend it because when you do a buyer agency with a realtor, it's you saying we are in agreement that we are going to work together. That agent then represents you in any transaction. So now you got your realtor, you're house hunting, everything's going great. You find the house you want. Step 4 is putting in an offer on that house. This is the most nerve-wracking part, especially for first-time home buyers. It's in my experience, there's 2 types of first-time home buyers. There's the type who are super excited to get in their new home and they have a lot of questions. They want to be in contact constantly, which none of this is bad. This is just one type of buyer. The other type of buyer is the one who puts in an offer gets accepted, and they immediately are buyer's remorse and are trying to get out of it before they even own it. There might be a third type. I've never met them. These are the 2 types I know. No matter what type you are, we can get through this. I've dealt with both, and they both have their challenges, but just realize when we go through the process that you're not alone. You're not the first one to be like this. We've all been there. So my advice, if you find a house and you want to put an offer in on it, sleep on it if you can. Now, in a market like we have today, that's not always possible. Offers are flying in, so you might have to act quick. But if you don't have to, and you can, sleep on it before you make a decision. After you slept on it, if you decide you still want the house, my suggestion is you make a strong offer. In today's market, this is not the time where you can try to get a deal. It's just you're not getting a deal. Everything is selling for asking price or above. So don't find a house that's been on the market for 2 days and be like, okay, I want to ask $10,000 under asking price. You're just wasting everyone's time. Just don't even do it. If that's the type of buyer you are, where you feel like you need to get a deal, you should just probably wait until the market changes and it becomes a buyer's market, where that's very possible. Just today is not the day for that. What's happening right now is most sellers, they're just going with the best offer and then just being done. They're not doing counter offers. They're just not messing around. So my suggestion is always just bid the most you can, where if you lose the house by $1, you're like, that's okay. That's too much. We're good. Too many times I have buyers who put in an offer, their offer does not get accepted, and then the next words out of their mouth are, well, I would have went higher. If you're willing to go higher, just do it now. Do not wait. It usually takes these buyers 3 houses they lose on before they learn, and then they finally start bidding what they feel they're willing to pay. Unfortunately, they lose out on probably the houses they really want in the process, and by the time they learn, now they're just settling. Congratulations, your offer's accepted. We're on to step 5. Earnest money. So earnest money is basically like a down payment. It's like a good faith. It can range anywhere from $500 to $10,000, depending on the price of the house. In our area, it's usually either $500 or $1,000. It goes into an account. It does count towards the sale of the house, so it's not like you're just giving it away. It's kind of comes off the purchase price. If for some reason the deal falls through, you get that money. You usually get that money back. The only time you don't get it back is if you just decide you don't want the house and you just walk away for no reason. Then you're not going to get the money back, most likely. But for any other reason, most likely you're going to get your money back. Step 6 is your home inspection. Get a home inspection. It blows my mind how many people feel like they don't need a home inspection. They're just trying to save a couple bucks. Home inspections, $300 to $1,000 roughly, depending on who you use. It's worth the money. I can tell you that I've never had a buyer get a home inspection and then call me after they're in the house complaining about things being broken or not working. But almost every buyer who didn't get a home inspection does. So, perfect example, I have a buyer, he's a builder. I don't need a home inspection. He buys the house. The day they move into the house, he's calling me, the furnace don't work. And he wants the seller to pay for it. Well, the seller's not going to pay for it. So now he's on the hook. I think he spent over $600 to fix the furnace. Home inspection would have been less than that, most likely. Another buyer did a home inspection. Home inspector saw that there might be some issues with the furnace. We brought in a furnace tech to double check. Furnace tech said, yep, this furnace is shot. So we told the sellers, hey, the furnace is shot. We want a new furnace. Bam. My buyers had a new furnace before they even moved in. It's worth the money to get the home inspection. Now, if your house that you're looking to buy is in the country, you're going to want to do a well, water, and septic inspection as well. You would not believe how many times we have these inspections done and the water comes back unsafe for drinking. It happens a lot. Step 7 is the appraisal. Bank is going to send out an appraiser to make sure the house is worth what you're trying to pay for it. If the house comes back and appraises for less than the asking price, you can still buy it. You just have to make up that difference or ask the sellers to lower the price to the appraised price. The bank is not going to give you more money than what the house appraised for. So keep that in mind. It's not often that a house comes back not appraising, but it does happen. But it's not often. Step 8 is your loan commitment. This is where the underwriter approves your loan. Here's a tip. When you are in the process of buying a house, when you first start thinking about buying a house, do not buy anything on credit. No cars, no credit cards. Just do not use anything that requires credit, because any change in your credit report or showing up on your credit report, just anything even showing up on it, could negatively affect your loan. So just don't do it. Wait until the house is yours. Once you own it, then go ahead and buy the car or whatever it is you want to buy. Step 9 is closing day. This is the day we've been waiting for. From the time your offer gets accepted until closing is usually around 45 days. Usually the morning of closing, we'll go out to the house, we'll double check, we'll do a walkthrough, make sure everything's good, no new damage, not a bunch of trash left behind, things like that. You give the green light, say, yep, everything's good. Then we go to closing. You will sign a ton of paperwork. You'll also give them, the title company, your cashier's check for your closing costs. Tip, make sure you have your driver's license. It is required at closing. So do not forget that. Closing could be held at a bunch of different places. Usually it's held at a title company, but sometimes it's held at a bank. And a lot of times we do closings right here in this office, right in this conference room I'm in now. So where closing will be held could vary. Congratulations, you are now a homeowner. See, it really wasn't that bad. Do me a favor. When you are done buying your house, you're going to get an email from your realtor's company, whoever that may be, asking you to leave a review. Please leave a review, good or bad. If the realtor was amazing, say so. If he could have improved on some stuff, say so. We're not perfect. The only way we're going to improve is if you tell us. So please leave the reviews. Well, that's it. That's buying a house in a nutshell. I hope you got a better understanding of the process. If not, leave any questions down below in the comments, and I will try to answer them the best I can. And thank you for watching.